What is going on with the Chillguy token on Solana? Why does the price keep dipping? Is this people taking potential profit from the prior rally, or is the current momentum slowing down? Is adoption slowing down? Let's have a look at the on-chain metrics. Let's try to figure out what's going on behind the price action to see whether or not it still makes sense to buy this dip. Now, I always like to share the social metrics of this channel because it is a potential gauge of where currently retail interest is headed. I published several videos on the Chillguy token before. Let's have a look at how the interest over time developed. So here's the first video on Chillguy on this channel. And what we see in gray is the performance of a typical video, and what we see in blue is the performance of that first Chillguy video. It outperformed the average video by roughly 2 to 3x. There was definitely above average interest. Another video followed with a similar outperformance. One more video, not that different. But then have a look at this one. This was published 6 days ago. It still outperformed somewhat. Initially it performed average, then it outperformed somewhat, but by not that much of a margin anymore. Now here's the most recent video, and this becomes now really an average video. The first video was this. The recent video was this. So this is a first hint how there might be declining interest by retail. Crypto is all about timing, right? It's about early. It's about identifying the tokens that currently have positive momentum, but that still have room to grow, where there's still organic growth, where there's potentially some virality, where there's potentially some word of mouth. And so the first video with most views was probably also the video that was worth watching the most, because at the time the price was only at 20 cents. And since then we went up by 83%, temporarily even by 211%. But let's stop with the past. Let's look at the future. Let's have a look at the on-chain analytics. Who's buying here? Who's selling here? What's actually going on? So here we've got the number of new traders versus returning traders per day on the left, and the number of token transactions on the right. And we can clearly see how there was a peak of attention on the 20th of November. Since then we are declining, and since the 28th of November we even have more recurring traders than first-time traders. And of course we want to see rather more first-time traders than recurring traders, because that means an expanding investor base. And so this is how useful this is, right? So the 28th of November, this is where the flip happened, where the orange bar was larger than the purple bar. And the 28th of November was over here, right? Since then, the price tends to rather decline. And so let's have a look at trading volume, and let's have a look at who's dominating that trading volume. On the left, we've got the trading volume in US dollars, and on the right, we've got that normalized to 100% per day. Again, we see our peak on the 21st of November. Since then, we are declining. And since the 21st of November, there's also a shift happening in terms of who owns the trading volume. So initially, the largest wallets, medium retail and large retail, tended to take over more and more of the trading volume. The fraction of trading volume done by small retail tended to decline up until that point. Then it turned around. So there's a clear trend reversal here. Once a small retail investor trades more, that's when the price tends to go down, ironically. It's actually not that ironic, because of course the whales tend to make the better calls than small retail, right? The whales trade a lot. They tend to have already accumulated a lot of wealth. They tend to be more skilled, because in the end crypto is a game of both luck and skill. And the more the game is played, the less important the luck component becomes, and the more important the skill component gets over time. Thus, the whales on average tend to make the better calls. And so if the whales on average tend to trade the token less and less over time, and it's again, quote unquote, the not so smart money that takes over, that's not a good sign for the price development. The smart money is exiting. And so we can also count the number of retail investors versus whale investors over time using minimum holding thresholds. So on the left side, we've got the number of wallets with 3,000 tokens, in the middle 30,000 tokens, on the right 300,000 tokens. So we go at 10x with each of those charts. It's roughly $1,000 worth of the token on the left, 10,000 in the middle, 100,000 on the right. And the number of those wallets tends to go down for all cohorts, and that's no surprise, because now Gate.io makes most of the trading volume. It's not anymore the decentralized exchange, it's not anymore Radium, it's now Gate.io and Bybit and Qcoin and MEXC, where the actual price discovery happens, but of course mainly on Gate.io. And on top of that, we've also got bets on the price, right? Derivative contracts that are mainly traded on Binance, and Binance is probably going to hedge itself as well. So 80% of perp trading volume happened on Binance. Now, here's the thing. Recently, the altcoins are having a very nice run. What we've got over here is the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10? And within a month, this went up by roughly 25%. A lot of money from traditional finance is finally flowing into crypto again. The stablecoin market cap tends to rise. It's even accelerating recently. And that's happening since the beginning of October of last year. What we see over here, that's the Terra Luna collapse. This is the Anchor protocol going bust. This is when UST depegged. It started the bear market where also FTX imploded, and then we saw the turnaround at the beginning of October of last year, and now we really see money coming in. All of crypto is going up. This is the bull run. The issue is that especially for the people that just recently start out, most people tend to buy the things that just recently went up. Most people simply buy the things where currently a lot of attention is. But the art in crypto, I believe, is to buy the things before everybody looks at it. Because once, especially the very risky tokens, they are already large, then we mainly see profit taking. For example, here, this is the largest meme coins in the Pump.fun ecosystem. So that's the launchpad of meme coins on Solana. And just have a look at this, right? This is the performance in the last 7 days. Most of those tokens went down. It's about buying tokens before they become large. For example, over here, this is the GOAT token. It's currently at 70 cents. And I tried to be early on this channel, right? I published a video when it was still at 24 cents. And so this is what this channel is all about, right? It's trying to identify tokens that have positive momentum, a lot of organic growth, but at the same time that still have the 2, 3, 4, 5x potential. And so if you want to be early next time, feel free to subscribe over here. I publish videos regularly. Now, how do I find tokens like GOAT early? Why am I so confident that tokens like this can go higher? The answer is wallet tracking. So the blockchain is 100% transparent, and we can have a look at what are other people doing. For example, over here, right? This is a signal today. We see how influencer CryptoGains bought the agent token for 0.035 cents. That was over here. Afterwards, the price went up by 120%. Then, of course, subsequently, it still went down. It's still up since the purchase. But that's how the game works, right? You want to buy tokens that currently have momentum. You want to take profit very early, and you want to buy the things that other influencers buy. You want to buy the things that insiders are buying. You want to buy the things that other top traders are buying. Now, here's that influencer, that CryptoGains influencer. He's currently got more than 130,000 subscribers. He's reaching the 140K, and through on-chain analytics, we found a lot of his wallets. We've got 55 of his wallets that we are tracking, where we get alerts whenever he buys or sells something. And so I just had a look at his recent video. This AI agent crypto will 100% make people millions. That's the strawberry token. So that's published just 19 hours ago when the price was at 26 cents. And we got our alert that CryptoGains bought the token for 17 cents. And so subsequently, the price went up by 215%. But surprise, surprise, once the video hits YouTube, it's already too late. We did see quite a correction subsequently. So have a look at this, right? This is actually 17 hours ago, right? This is the top at 11 p.m. Now it's 4 p.m. And this video was published 19 hours ago, but that doesn't really match with the price. So the video was published somewhere when the price was already here. So something happened between recording of the price and publishing of the video on YouTube. And so here's potentially what happened, right? It's just a guess, but probably CryptoGains bought the token. He found it very interesting for whatever reason. He then potentially talked about this in his premium community. Then some of his people might find the token interesting as well, right? It might have been a recommendation to buy, but it's simply just a mention potentially in that community. A lot of his followers buy the token, and they're pushing up the price further and further. And once the YouTube video hits, that's then when they tend to sell. That's probably why we see the recent decline. And so that just shows how much power there is in wallet tracking. With wallet tracking, we can be among the very early buyers. We can buy directly with the influencers, with the insiders, before all of those other people buy in. It's really about getting an edge in crypto. It's really about learning more than others. It's figuring out the data that most people are too lazy to compile or that don't have the capacity to compile. Now, I talk now a lot about the single influencer, but it's actually not just crypto gains that we're looking at. For example, check this out. This is Crypto Banter. They've got 1.1 million subscribers. When they talk about a token in a video and thousands of people watch that video, of course this generates attention. Of course this pushes up the price. And so of course we also have some of their wallets. We've got 33 that we are tracking. Well, have a look at this. This is Alex Becker, 1.5 million subscribers. And we've got 12 of his wallets. I really believe this is the way to make money in crypto. It's not drawing random lines on charts, etc. It's getting an information edge. It's working for that information edge. And so that's why I created a tutorial course just on how to find influencer wallets, how to then set up alerts for those influencers, and how to then also interpret the signals that we get from the alerts. It's 8 videos in total, and it's all part of the premium membership of this channel. Now, I do not pump and dump on this audience, right? We are just trying to find information edge outside of the community. Now, premium is not just about wallet tracking. It's also about backtesting indicators. It's also about risk mitigation, portfolio diversification, on-chain analytics. There's more than 100 tutorial videos in total. Once we have a wallet signal, we of course also have to discuss when should we buy, when should we sell. We have to compare our on-chain analytics. That's why we've got the dedicated chats on the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. And so does it make sense to buy the Chillguy token now? I am not so sure. The question is always about risk to reward. Could the price in US dollars still go up from here? Yes, of course, because of several reasons, right? The overall crypto market is expanding, so all US dollar variations go up. And at the same time, Chillguy has a lot of ownership by Binance and MEXC, etc. as well. And those exchanges are interested in a lot of volatility because volatility means trading volume and liquidation fees. That being said, is the risk to reward really that great for Chillguy now? Have a look at similar tokens in the same category. So this is also the Pump.fun ecosystem, the same place where Chillguy is coming from. This is also Solana, and those are the largest market cap coins. And most of them went down in the last week. Again, large market cap does not necessarily mean safety for meme coins. It rather means limited upside. Which tokens did the best in the same category? It's the small market cap tokens. It's not in the hundreds of millions of market cap, it's only in the tens of millions, potentially even just single-digit millions. And so this is probably the best place to focus on. Nobody can predict prices, nobody knows for certain where Chillguy is going, but we can all make risk to reward trade-offs. And I believe currently Chillguy is not necessarily the best place to invest. I think there are better opportunities out there. I think there are still tokens that can 2, 3, 4, 5x from here. Chillguy will need quite a lot of capital in order to do that. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.